wait for that chance, gotta
Easy
trade my
money,
best.
let's
When the
go.
market come around me, trade like you mean it.
Juice.
Even though you've been in it.
Yeah, yeah,
When the
yeah.
market come around me.
Previously on KIMBA TV. So for somebody like me that's in a long, fingers crossed, but even if this holds, brother, this is going to be a really interesting SFP that you have to be aware of, JV. Because I'm still not going to get got like on this. And remember, this is all weekend bullshit. So cut that part out and move this bitch over here. It's literally just doing this. So this could still look good on RTH. Nitrogen says, what's our plan for today? Nothing has really changed. Nitrogen, if you remember, the lesson for yesterday was these. So we'll wait for that. Same thing, nothing has really changed. Real Colorized Panda says, I was long 116.8 but stopped last night, so sad. That's okay. We re-entered again. Easy money, Bugatti money. I mean, you know, it's basically everything that we talk about. Trident, you had the bigger trident and then the smaller trident. And then on top of that, this was Pixel Perfect 7.5. So yeah, you know, hidden bull div, regular bull div, 7.5, and easy money, Bugatti money. That's an easy long. Yeah. So basically everything that we talk about, and then like we talked about yesterday, we'll keep an eye on the RTH bad high and the ETH bad high. So let's see if that is a SFP. Let me know if you guys have any questions. Should be an easy day today. Jojo says, okay, thank you. On 30-minute time frame, it's okay. Jojo, that's not how you trade. So what I want you to do is see it on 15-minute, see it on 30 minutes, do it on 60-minute, and see if you can notice the difference. We talked about this yesterday, Jojo. You compensate with time if you don't have edge. So if you have really good volume, if you have divergence, if you have structure, you don't necessarily need to wait on the 30-minute. By default, it is 30-minute though. All right, but you need to see it thousands and thousands of times so that you can understand the different combinations that exist. Okay, Jojo, trying to memorize how to trade is like trying to memorize how to ask a girl out. Okay? Imagine if you came up to me and said, okay, Kimba, I'm going to ask this girl out. Tell me everything that I should say. If she says this, what do you say? And then if she says this, what do you say? And if she says this, what do I say? Okay? So if she says something that you didn't expect, now you're fucked. Now your goofy, awkward self shows up. You got to have that swag. You got to have charisma. You need to be able to adapt. You can't go up to a girl and memorize what you're going to say, right? You need to be flexible. You need to come up with shit on the spot. That's what gives you the swag. So don't be trying to do the same thing in trading, trying to memorize. Okay, Kimba said do this, and then do this. And then if it does this, do this. That's not how you trade. The data is always going to tell you what you're supposed to do. So sometimes it's on 30-minute, sometimes it's on 15-minute, Jojo, sometimes it's on 5-minute. But you need to be able to understand when you change the time frame. And that will come with experience. Alrighty, so yeah, by default, it's 30-minute, but you need to be able to understand that there are other variables that will come into play that will make it so that you don't have to wait for a 30-minute candle close. Did that make sense? So remember, you compensate with time if you don't have edge. Yeah, But yeah, so 30-minute is the default, but you have to understand that there are, like, for example, if S&P is really, really bullish, I'm probably not waiting for a 30-minute. You know? So, but you see this though? You see what I mean? Do you like this? This is called dip the tip. And then how coincidental that it's right on value area high. What a coincidence. Pretty cool, right? But that's called dip the tip. All right. So theoretically,
yes, science.
you know, if you played it by the book, your entry is 119,490 on CME, and that's your stop loss. Okay. But I would hope that if you've been here long enough, Jojo, you would have understood that value area high bullish retest is a pretty good place. You would have tried to get somewhere in here. You see how it says value area low right there? The minute that it did this and it started to do this and the value area low was in, you could have started market smashing. So this is your entry before the open. That's your stop loss. This is called dip the tip. It's a buy the book play. Pretty cool, right? So this is what I was telling JV. Even though he got stopped out on his long down there, if he really had to, that's his entry. That's his stop loss. This isn't something that I make up on my own. This is by the book. Okay? Pretty cool, right? Easy money. And like we said, man, we're going to watch these bad highs today. This happens a lot, Jojo. So what I want you to do is every day start keeping track of how many times the dip the tip works, and start to understand the probabilities. You're gonna see, okay, for the last 3 years that I've been tracking dip the tip, you know, out of 1,000 days, 82% of the time dip the tip worked, and then that's how you know you can start to trust it. Alrighty, big dog. Oh, stop the music, stop the music. Pro Contro from YouTube is asking, Kimba, have you shorted? That's a negative. I'm going to get stopped out on my long if this keeps going lower. If this ends up like continuing, I'm going to do it this way. This. Like this. Isn't that crazy? Isn't that like I can just draw these things like pixel perfect? That's the short that I would take. Yeah, Thomas gets it. Yep, that would be the short if I was going to short. But I already have a long from here, so. Alrighty. My next short would be here. Yeah, or ETH. I mean the RTH, if it looks good. Yeah, because for me, pro contro, I don't get bullish, or excuse me, I don't get bearish until the VWAP is lost. Yeah, so, you know, are we inside of value? Is there a chance that we're going to rotate down to value area low? Yes, right? So if I see like a bearish retest of value area high or something like that, that might potentially be a short too. But yeah, until we get a 30-minute candle close below VWAP, not yet. But I would take the 886618. Yeah, anytime that I think this is going to get broken, that's when I'm going to be looking for a short. And so for me to think, okay, this is going to get broken, there's going to be, like it's not going to do this, right? Like it's going to lose the golden pocket and it's going to do something like this. So that's the one that I would probably take. All right, pro contro, that's what I usually take. If I have levels up there that I'm waiting for, I'm not going to just randomly short here. I'll usually wait for structure change. All right, control, because like this is kind of a easy one, like from here to here. You know, so I don't want to get too greedy and try to have entries. Like when I'm sure that this gap is going to fill, I can take a quick, easy short, I feel like. Alrighty. Can we do TA on Sol? Well, it's the same thing. Like I would be waiting for pullback. Like that's your next long, I think. Like here. Yeah, so Sol TA hasn't really changed. I mean, I think every pullback, I think you're looking for a long if you have the chance to. Yeah. So if Bitcoin goes to like 111 or 114, I think that would be really interesting. Yeah, but this is kind of like you do this and you already had the 1.25 hit. So you're waiting for like the 0.75 basically, or the 886. Like this basically this zone right here. So yeah, nothing has changed. I would just look for, I would just look for longs every time it has like a big pullback. Yeah, ETH is pixel perfect. I mean, is that surprising? And then same thing, we're looking for, so look, we talked about how watch for 886 yesterday. These are all from yesterday and the day before. And then we said look for the golden pocket. So I think would make sense. Yeah, nothing has really changed. All right, and let me lock in on ES because we're thinking about taking this long, right? I always say this, it's half serious, half joking, but I don't know who is crazier, for me to stream every day for 4 years or for some of you guys to watch me every day for 4 years. Ugan, let's go. Ascenti, let's go. JPK, let's go. Brutara, let's get it. Gustavo, let's get it. James Kirk, let's get it. KCEX, let's get it. Cyrus, let's get it. Sephora's, let's get it. Chomax, let's get it. Seven Hetta with Enoch. And I know it's not just me that recognizes these names. I'm sure when I say these names, you guys recognize them as well, don't you? My mate Nate, Shamas, 420, Kolroon. You guys all recognize each other, right? Do you guys holler at each other on Discord? You really should. I hope you don't like create a divide between, oh, he doesn't agree with me, or oh, I'm longing and he's shorting, or oh, he's shorting and I'm longing, and you don't really become homies. That would be so fucking stupid. You would be really surprised to realize how similar we all are, y'all. So don't ever let like the difference in trade or TA interpretation be a divide. You need to work that shit in. Help each other out. Don't be so insecure that you get all pissy if somebody doesn't agree with you. It's just a trade. You know? So it really shouldn't matter if you're doing you and you do have edge. It really shouldn't matter if somebody agrees with you or not. In fact, it should be a net positive. You might see something that somebody else sees and it might save your ass. You never know. You got to be objective and you can't play this like I'm right, you're wrong game. Because once you start playing that bullshit game, you're fucked, I think. You're going to let your pride get in the way of managing risk so much. The main issue that I would have about this is that open interest delta would indicate that this is a short squeeze, and rightfully so, right? But like, you don't want to get too carried away when the open interest is declining like that on a pump, right? We've gone over this before. If the open interest delta was going up, that's awesome. But you're telling me that all the longs are closing and the shorts are getting squeezed, and that's why we're pumping? I mean, all I will say is this. You need to get significant buy volume up here. Otherwise, you're probably going to see me in a head short up here like we planned, okay? Yeah, I mean, I'm still thinking 130 and higher on the higher time frame, but that's exactly the kind of shit I'm talking about. You got to be careful up here, especially if I see like top longing up here. Oh my God. So I can't help myself. If I see an SFP up here and top longs and shorts getting stopped out and bear div or a higher time frame hidden bear div on CVD, even if I'm gonna get round tripped and stopped out for no profit on the short, I'm probably still gonna take it. So, all right. And Alpezy asked straight up if I have any blinds. Answer was yes. Baby blinds. Anything else you guys want to talk about? Let's go, Jesse. Congratulations. Gustavo, Shamas, Hedge Fund. Fred says that meme is cracking me up. Don't let that shit distract you, though. You know what I mean? I'll turn that shit off if it overwhelmingly starts to make you think about an SFP, because you do realize that it could just do this, right? I can take that off if it's gonna like fuck you up, but don't let that fuck you up. So we're just having fun with it, but you know, if you want to shave a little bit of your long, that's cool. But let's see, and you know, we only have 42 minutes on RTH, so we might as well start thinking about what we would do if it grabs it during Macaulay and during ETH. Yaya says, if it happens during Macaulay and all the edges there, you still taking it? Yes. With the assumption that I'm probably going to get stopped out, Yaya, and I'm going to be looking for like a regular bear div or with a higher high. So the thing that I want you to pay attention to, Yaya, is should you not take something because of something? Or do you still take it with the assumption and proper risk management that that one's probably not going to work? You're probably going to have to do multiple attempts. So there's a distinction, right? And the other thing that I would say is I want you to really start focusing and paying attention to all the positions that you take, especially SFPs or failed auctions during Macaulay. Because Macaulay happens 5 times a week. So like every week you have a possibility of extracting 5 data points. But if you ever get a failed auction or SFP, regardless of whether you're in the long or the short, just start taking note of what percentage of the time those things get cleaned. Bonus points if you want to throw in extra variables, like this one has a bearish divergence, this one doesn't. This one did stop out all the open interest, this one doesn't. This one does have bad highs or bad lows. This one doesn't. So if you can start to make those distinctions, even better. But generally speaking, to tell you what we've been noticing for the last a year and a half, I don't know, is it's still worthy of taking it, but you need to understand that you're probably going to get got. What I would do is if it dumps or pumps and the CVD or the RSI overcompensates, so this is what I mean. Let's say, for example, that on this move right here, okay, the divergence or the oscillating data dumps harder. Okay, so when it pumps, now you've got something like this. What is this? So what I would be looking at if I do get filled during Macaulay, is let's say that I take this short, right? I'm going to be watching this move and the data to see if it's overcompensating to create a situation like this. Because then when maybe CME comes back online, you get the clean. Okay, but you and I both know that whether even if it's like a super shitty high or a super shitty low, they're saying fuck it, we don't care, we're gonna leave that shit behind. So I think the better way to go about it is, even if it's during Macaulay, you still take it, and you just start thinking about worst case scenario like that. Jay Brooks says, I just went through my NFT wallets for the first time in years. Holy, the amount of I lost. LMAO, stupid. Jay Brooks, KIMBA NFT coming out soon. Is that something that you're interested in? Paul says, of tracking the money with confluence of whales alert, etc. And I want to nerd out this weekend, but I'd like you to explanation for clip it and cross it in my next nerd out. Sure. What do you want to call it? Step one? Why wouldn't it go? Whatever, fuck it. And then, okay. So then from here, you're gonna go, and then for derivative, you're gonna come. So if it is derivative, then you're gonna go. Or fuck, running out of space. Okay, and then, well, no, I don't want to draw it like this. What I want to do is, fuck. Okay, and then this level is so charts status special KIMBA indicator coming soon. Well, and then from here you're looking at open. So basically, Paul, this would be the breakdown. You get the notification that you had 50,000 BTC or $50 million of whatever. So if it goes to spot, the only thing that you can do with coin is you can only sell it. So it's bearish. So it's, if 50,000 Bitcoin, if 20,000 ETH, if 1,000,000 Solana, if the coin gets inflowed into a spot wallet on the exchange, then it's bearish because the only thing that you can do is sell. If you get the stable coin going into a spot wallet, it's bullish because the only thing that you can do on the spot exchange is buy. You can't open margined positions. And how do you figure out if the coin went to the spot side of the exchange or the derivative side of the exchange? Well, you use on-chain analytics tools, something like CryptoQuant. Okay? So if it goes to spot, it's pretty simple. 99% of the time, this is what happens. It's rare that you'll have somebody moving 50 million in USDT, 50,000 Bitcoin, 100,000 ETH, only to just move it to the exchange and withdraw it without doing anything. Like, nobody is going to move that kind of money and take risk of moving it to debate or fake shit out. They're moving it for a reason. So this is something that you can go back and take a look at yourself, and I think it's just common sense. All right. Now, obviously, it's a little bit of a different story if you've realized that they move that shit to derivatives, right? So now they can open a short or open a long using it. So if they transferred, 20,000 Bitcoin, well, you're going to be looking at the open interest on coin margined contracts, right? Because if they deposited coins and they're opening positions with it, then the open interest on coin margin contracts would go up. If they deposited stable coins, then you're going to look at stable coin open interest on that exchange. That's when you know, oh shit, they're starting to use that money they just deposited. Roger that. What you want to try to do, Paul, is notice patterns. So what we have noticed, okay, is what market makers like to do is they will open margin positions using coin margined contracts, specifically when they're about to scam pump. And the reason why they do that, and what we've seen, literally seen them do using all of this shit, is they will get into longs using coin margin contracts. So something like BTC, USD. They'll get into longs. And Paul, what happens if you have a coin margined contract and you have a long and you TP? Or if you have a short and you TP? What do you get paid out in? If you deposit Cardano or Solana or ETH and you open a long using that coin as margin, when you TP your position, what do you get paid in? Do you get paid in USDT? No, you don't. You get paid in this, right? So market makers, they like to open coin margined longs, okay? They will pump the price, okay? They will TP. What happens when they TP? They get the coin, correct? And what they do is they take this coin that they just TP'd, got paid in profits for, they'll move it over to the spot exchange, and then they'll dump it on the top longers and top buyers. Isn't that crazy? Pretty clever, right? But what I'm trying to showcase is all of that you can see. Okay, I'm not making that up. We've seen that happen on chain dozens, if not hundreds of times. Okay, so you can go, by using tools and data, you can go from getting a whale alert tweet to figuring out where it went, okay, to figuring out historically what it means, okay, and then last but not least, you can use tools and literally watch them open positions. If they deposit money and they open positions using that margin, the open interest is going to go up. All right, Paul? So you can make very similar generalizations about how they like to use, stable coins when they're about to scam dump. All right, and then you can use stuff like this. Like you can see the spot walls and you can see the derivative walls. Exclamation YouTube. But you don't have to guess. You don't have to take my word for it. With these tools, Okay? Most of them are free. You can see it yourself. And that's what you want to use to trade, I think. Or that's part of the trading aspect when it comes to like pattern recognition and seeing it for yourself. You guys are the fucking best, Lions. Never, ever forget that, y'all. Peter, Manaka, let's get it. I'll be here bright and early tomorrow, man.
If the market stopped moving, I'd wanna be here with you.
All right, I'm not sure if the thing will actually work because I don't think the WebSockets are connected right now. But hey, longers, I'm rooting for you. Shorters, I'm rooting for you. Bulls, Bears, we're all Lions. Can I get a Kachoya?